And I think it's extremely true. We earn the average of the 5 people we spend our most time with. There's been a lot of studies that prove that to be true. And so my encouragement to you is think about, where do you want to go? Find the people that you can surround yourself with. Invest in yourself in masterminds. Invest in joining and going to events. And that's where you're going to surround yourself with those people. Not only are you going to be developing your knowledge, your skills, you're going to meet and network with people that are going to elevate your game and your ability to go out and add more value into the market. Hey, what's going on, cash flow hackers? It's Chris with Life 180, and for this video, we're going to be talking about the 7 things that are keeping you broke. Now, there's a lot that I could get into with this. I did a good amount of contemplation around what are these 7 things. And so I'm sure I'll come up with a couple bonus ones, but let's just get right into this. The first thing keeping people broke is the fact that you don't have enough clarity on what your goals and objectives are. Stephen Covey, in his book, 7 Habits of Highly Effective People, says that if you want to be successful, you need to begin with the end in mind, and then you need to reverse engineer a plan to get to where you want to go. And so you can't make a plan if you don't exactly know what you're trying to achieve. It's like if you don't know where you want to go, any road will get you there, right? And so making sure that you have clear objectives and clarity around what your goals and objectives are for you, for your business, for your family, all these different things, only then are you going to be able to figure out how to set up a financial plan and a financial strategy that's completely in alignment with your values, right? Because think about it this way. I'm a big believer there are no good products. There are no good financial tools. I'll say there's no good or bad, I guess is the best way to say it. There's only what's right for you. And you're not going to know how to delineate what is a good investment, what is a good asset that is going to fit into helping you reach your objectives unless you're clear on where you want to go. Then you can invest in the knowledge that you need to understand to figure out how do you make an educated decision on how these investments help you get to where you want to go. So that's number 1. So the second money mistake that's keeping you broke is not measuring your monthly P&L statement. Look at it this way. When we run a business, one of the biggest things that you have to do is you have to track your inflows and outflows of capital. You need to keep track of sales. You need to keep track of expenditures and overhead. All of that is measured on a monthly P&L statement, a profit and loss statement. Now, in our personal lives, a lot of people call it a budget, right? Like we think about what is the purpose of a budget? It's to figure out what are we spending, what's our monthly overhead, how much money do we have coming in. I don't like the term budget because the term budget really has, to me, a negative connotation with it. It has this scarcity mindset that goes with it. But if we think about our lives as a business and we think about it as a monthly profit and loss statement, we're thinking about it from a growth perspective, the same way you are in a business. Anything you measure improves. And so I don't want you to look at it from a scarcity mindset and how do you restrict. But if you come at it from the perspective of, I'm just trying to be intentional about measuring what's coming in, what's going out, how do I put together a plan that I know I can improve the condition and the status of my monthly P&L on a monthly and annual basis, that's what's going to help you get to where you want to go faster. So the third money mistake that's keeping you broke is the fact that you don't have an emergency fund. Now, I know that may sound weird, but one of the biggest lies that I think people are told and kind of taught is the younger you are, the more risk you can take. And while that may be true because you have more time to make up for the losses if you have them, having an emergency fund in place as early as possible puts you in a position so you can actually behave like a good investor. Human behavior is what causes more financial calamity than anything else. It's not the markets, it's not the cycles, it's not any of that, because the bottom line is a lot of these cycles that we go through creates opportunity. And that actually leads me to number 4, which is the 4th money mistake that's keeping you broke is after you have your emergency fund set up, you need to have an opportunity fund. So not having an opportunity fund to be able to take advantage of the market cycles as they present themselves to you is a huge issue that most people don't have. Let's face it, I'm going to combine these two together, the emergency fund and the opportunity fund, because if you look around the country, 64% of Americans do not have $2,000 liquid and accessible in case of an emergency or opportunity. And those that do have it, out of those that have the $2,000, 70% of those people say that they would have to pull that money from a qualified account like a 401k or an IRA to access it. But if you understand anything about investing, this is what I'm talking about with human behavior. If you are going into your retirement accounts and your investment accounts to operate as your emergency fund, what happens is typically you need access to that money in down economies, right? Typically in down economies, those assets are going to be performing worse. They're going to be negative at that time. The worst thing you can do to achieve your goals is to liquidate a negatively performing asset. So by having your emergency fund and an opportunity fund, not only are you allowing those assets to just kind of bounce back and give them a chance to recover, which is going to basically allow you to behave like a good investor, but on top of that, you have an opportunity fund now. So while everybody else is struggling, while assets are depressed in value, you have the opportunity to take advantage of the discounts that are going on in the investment markets, whether it's real estate, stocks, business, whatever it is that you want to put your money into, that those opportunities are going to be presented to you, and that's how you catapult your wealth forward much faster. So the fifth money mistake that's keeping you broke is you're trying to get rich too quick. I understand the keeping up with the Joneses. We get excited. We want to accomplish results in the fastest way possible. But one of the things I was told that really made it a pretty significant impact in me in my personal life is, Chris, sometimes you got to slow down to move fast. And for me, that really hit home, because I'm one of these guys. I want to go. I want to get fast results, and so on and so forth. But when you understand the concept of slow down to move fast, you understand that sometimes it goes back to the emergency fund and opportunity fund. Take the time to build those funds. Slow down to go fast, and you will put yourself in a position to succeed. What I know is getting rich quick doesn't work typically for most people. Now, can you achieve success with that mindset? Sure, there are people that get lucky. There are people that have success with that model, but it's not a predictable model for success. And whenever I'm doing my coaching with people, I'm always talking about what's going to create the most predictable model and outcome for success, right? Like that's kind of how I make my decisions. And what I know is, typically speaking, people way overestimate what they can accomplish in a year, and they underestimate what they can accomplish in a decade. So my encouragement to you is, get rid of the get rich quick thinking, invest in yourself, think long term, and what I said at the beginning, begin with the end in mind, and then you can start to invest in yourself and in a plan to execute on achieving your goals. And that leads us to the sixth reason that you are remaining broke, is that you're not investing in your own skills and knowledge, and I'll even throw network into this one. One of the things, this is what I'm talking about. If you have clarity on where you want to go, if you have clarity on the problems that you're able to solve for people, you understand where your value is highest. And I'm a big believer that money follows value. So your ability to create wealth and increase your income and revenue is going to be directly correlated to your clarity around the problems that you solve for people and the value that you're able to add to the market to solve those problems, right? And there's also a direct correlation to what is the value of that, of those challenges, right? Like, I know people that can make money and that do make money in all sorts of areas. Knitting, for instance, you can create YouTube channels and create courses and patterns and all these things, just knitting. I do financial coaching and financial advice, and I coach life insurance agents, and I help people eliminate their debt, regain control of their financial life, understand how to launch a business with their online marketing. Those are pretty high skills, but it's taken me a decade or more in a lot of situations to master those, but I've spent literally thousands and thousands of hours in that. Now, above and beyond your knowledge and your skills, I think an important thing to kind of throw in here as a bonus is your network, right? Our network is our net worth. That is a statement that's been made a lot recently, and I think it's extremely true. We earn the average of the 5 people we spend our most time with. There's been a lot of studies that prove that to be true. And so my encouragement to you is, think about, where do you want to go? Find the people that you can surround yourself with. Invest in yourself in masterminds. Invest in joining and going to events. And that's where you're going to surround yourself with those people. Not only are you going to be developing your knowledge, your skills, you're going to meet and network with people that are going to elevate your game and your ability to go out and add more value into the market. And finally, the 7th money mistake that's keeping you broke is that you're not taking enough calculated risks. Now, I understand why this happens. People typically are not taking enough calculated risk because you don't know what to calculate, right? Like you don't know where the opportunities actually exist, right? And so one of the things that I know to be true is if you follow step 1 through 6 that I just said and you improve in those areas, it's going to help you solve the 7th problem because you're going to have higher levels of knowledge, higher levels of skills. You're going to have a better network. You're going to be able to connect with more people. You're going to know how to identify those opportunities in a more succinct fashion. You're going to know how to evaluate when it's a good investment, when it's not, when it's in alignment with your skills, when it's not, when you know you can add value to a situation, when you can't. And so it's going to help be your compass that's going to show the true north of what the right path is for you to get to where you want to go. And once again, going all the way back to number 1, if you have clarity on what that is for you, then it's going to be easier for you to measure what the track looks like for you on the path to get there. So anyway, those are the 7 money mistakes that are keeping you broke, what you can do about them, how you can start to execute. If you want to learn more, make sure you subscribe, hit the bell. That way you get notified every single time I launch a new video. If you have any questions, any comments at all, go ahead and comment in the comment section below. I look forward to engaging every single one of them. I do my best. My wife always gives me a hard time that it's easier to get a hold of me by leaving a comment on my YouTube videos. I'm faster with those than I am with text message. So I love doing this. If you have any comments, leave them below, and I look forward to being in touch soon. Until next video, have a blessed, inspirational day. We'll talk then. See ya.